All right, everybody. Thank you for joining us. We're clearing out the waiting room and we'll get going here in about a minute or so. So thank you for joining us. It looks like we still have a few people trickling in. So again, we'll give it about 30 more seconds before we get the show on the road. All right. Well, it looks like we've got everybody coming in. I think we've got a few, straggling in, but we'll get this started. We've got an action-packed agenda for you today. So, good morning, afternoon, or evening, wherever you are in the world joining us today. And thank you for attending the Greater Sacramento Economic Council's FinTech webinar. My name is Scott Powell. I'm our Senior Vice President, and this program will begin momentarily. But before we kick it off, I want to provide you guys just a few housekeeping items. So we are going to be discussing the future of the FinTech in the Greater Sacramento region. We got a panel discussion around recent events in digital currencies. Wanted to let you all know that the event is being recorded. So if you have any questions during this event for our panelists or anything else, please use the chat function. You've been on enough Zoom meetings, so you know it's located at the bottom of your screen. And we will do our best to address them. If we can't get to them, we will be sending out a follow-up to all, people that registered, and we'll do our best to address that question. If we can't get to it, or you want to know more, let us know, and we will make sure we do our best to get that answer for you. So without further ado, to get this going, it is my distinct pleasure to introduce our President and CEO, and also Greater Sacramento Economic Council board member, Kieran McCullen. Kieran.
Thanks, Scott, and thank you to everyone for joining us either live today or via recording at a later date. As Scott said, my name is Kieran McMullen. I'm the President and Chief Executive of Suncrest Bank. I'm also a board member of the GSEC Council and a very enthusiastic member of our FinTech Consortium. Let me start by welcoming you all to our webinar, and I'm very pleased to say that we have guests and participants not only from the Greater Sacramento region, but from right across the US and from abroad also. And in fact, I'd like to give a special shout out to my friends in Northern Ireland, a belated happy St. Patrick's Day to all of you. So it's kind of an understatement, I think, to say the events of 2020 have had a huge impact on the financial services industry. But perhaps what's not stated quite enough is that impact, in our opinion, is permanent and it's irreversible. Many of us have had to rethink how we operate internally. We've had to rethink how we go to market externally, and with a younger workforce demanding new solutions for how they bank and how they invest, financial technology applications have become more important, I think, than ever before. And at my own company, we're seeing just how quickly these developments are having an impact. We have permanently closed our executive offices. Our exec team now operates entirely remotely. We've established one online lending platform, and we're in the process of launching a second one in the micro loan space. And we're actively exploring the opportunity to offer our customers a custodial service for digital assets. None of these things were on our agenda even 12 months ago. So it's a very exciting time to be at the interface of community banking and financial technology. And there's an enormous amount happening, and not just at our bank, but at all the other local community banks and financial institutions that are involved in our consortium and right across our region. So that's why we're convinced, I think, that the FinTech sector is such a significant growth opportunity for us. And we set about responding to that opportunity in the spring of last year when we launched the Greater Sacramento FinTech Consortium. And it really had a twofold mission. One, connecting local financial institutions with FinTech firms, both locally and internationally, and connecting FinTech firms with capital and with the right talent. And I'm very pleased to say that the consortium now includes over 30 members, including the California State Banking Regulator, both the California Credit Union League and Western Bankers Association presidents, in addition to a large number of regional financial institutions, VCs, and other folks. So that's a powerful and influential group with real determination, I think, to seize the opportunity and make Greater Sacramento one of the leading FinTech investment destinations worldwide. And you're going to hear from some of those folks this morning. So I'll finish up and just summarize what we're going to cover today. And it's really two things. One, you'll hear an overview of our FinTech region, our FinTech industry, and what the opportunity is. And two, we're going to dive into a panel discussion on the rapid emergence of blockchain technology, the enormous impact it is having and is likely to have on the financial services industry, and what to expect from a regulation and a compliance perspective. So there's a lot to cover. So without further delay, I'd like to pass it over to the next three speakers, the first of which is my friend James Beckwith. James, over to you.
Thank you so much, Kieran. I appreciate your leadership in the FinTech Consortium. I'm James Beckwith, President and CEO of Five Star Bank. We're a regional business bank. We've been involved with GSAC for about 5 years. Several of our founders and directors were also founders and directors of GSAC. So we're also heavily involved in the FinTech Consortium. As Kieran mentioned, several of us have adopted strategies that involve FinTech companies, whether for us, it's more or less on the lending side and certain aspects of digital banking. So we're excited about pushing this whole notion of our region being a FinTech hub. On that point, Greater Sacramento is home to over 50 FinTech firms with 6 subsectors in the industry: insurance, small business, lending, digital banking, real estate, and wealth management. And it's become this hub because of several efforts. It's principally surrounding the fact that we've been able to raise capital here for our FinTech companies. And we have raised over $1.23 billion and have created access of our locally owned and operated FinTech companies to capital throughout the United States and internationally. Not only do we provide these FinTech firms with access to capital and to state regulators, as Kieran mentioned, but also the talent to grow and to be successful. Before the pandemic, the region saw an inflow of 20,000 people in net migration from 2017 to 2020. Now that's been accelerated during the pandemic. The region nearly doubled its net in migration in 2 quarters of 2020, with over 40,000 folks coming to the region. That's exciting news. That drives business, that drives services, that drives housing, and just really helps spur economic growth within our region. The region has over 380,000 students enrolled in 4-year universities within 100 miles, which includes our 2 home universities, Sac State and UC Davis and University Pacific, but also talent from UC Berkeley, Chico State, and Stanford. This is a significant competitive advantage for our region because we've got the talent. Now, when you combine talent with capital and fresh ideas in the FinTech space, you can see how we're poised for growth. I'd like to hand it over to Jeremiah Smith from First Northern Bank to discuss the FinTech mega region. Jeremiah?
Thank you, James. And Kieran, thank you as well. Both of you have done so much for the region, and we absolutely appreciate it. So good morning, everyone. I'm Jeremiah Smith. I'm the Chief Operating Officer at First Northern Bank and just one of the many contributors here. Very honored to be here today to be a part of this conversation. little bit about First Northern Bank. We're a $1.7 billion community-minded full-service commercial bank. We have dual headquarters. We have one right here in the heart of GSAC, the city of Sacramento, as well as in Solano County near the Bay Area region. So at First Northern Bank, a few other things, we only hire the best. We do have one caveat though. You can't just be great at your job. You also need to be kind. I think we have a few excellent examples of that on the call today. We have Libby Fye, our Director of Human Resources, and Kristen Hollinan, our Business Development Officer in our Rancho Cordova location. Both great, but they're also kind. So thank you both for being a part of the discussion today. So First Northern has been meeting the financial needs of the greater Sacramento region for over 110 years. Over that time, we've had the pleasure to see firsthand how improvements in fintech have increased the financial wellness of the region, and more specifically our clients through our many fintech partnerships. It's because of that 110-year commitment to the people of our region that we understood very early on that the strategic vision of GSAC and the execution and leadership of Barry Broom and his team was something that First Northern needed to be a part of. Now, the FinTech consortium that facilitated today's conversation was one of the many logical places for First Northern to lend our expertise in FinTech and partnering with Finovation companies that are creating new and better experiences for consumers and businesses, while also improving access to capital and financial products, which means more opportunity for all. And our region, as a result of a lot of all of this work, we're now known for our innovation. Now, the greater Sacramento region is located just east of the Bay Area region. Combining those two, we have a mega region of resources. Now, that mega region was ranked the #1 global fintech hub in 2019, with 12 unicorns, over 80 deals valued at $30 billion. We have major investors like Andreessen Horowitz, Indec Ventures, Khosla Ventures, leading the way. Of course, we also have local firms such as Moneta Ventures and Winning Streak Ventures. Now, that $3 billion is roughly $1 billion more than the next closest market. This gives companies in this mega region a significant advantage and direct access to capital and the ability to raise capital with industry leaders. Now, beyond the deals and the fintech firms, the fintech mega region I just talked about has a shared workforce of almost 238,000 workers, meaning that there are over 144,000 people living in the greater Sacramento region that work in the Bay Area. And of course, there's 93,000 Bay Area residents working for the greater Sacramento firms. So this is providing firms with a deep and ample talent pool, as James talked about, to draw from while operating in this region. Now, before I pass things along to Aaron Klein of Risk Allies, to provide you an understanding of what it's like for a fintech firm operating in the region, I just again want to thank Barry and his team for putting this together today. So thank you. Aaron?
Awesome. Thanks, Jeremiah. And thank you everybody for having me. It's just a thrill to be able to support the great work that GSAC is doing. I love that Barry and team had the vision to pick fintech as a focus area for our region. I share what Jeremiah just said about fintech actually being a very broad set of business categories. You can break them down different ways. I think of it as kind of banking, lending, payments, insurance, wealth, real estate, regulatory, personal finance, crypto. Just in wealth tech alone, which is kind of like the subset of fintech that we call ourselves. The region has had several great companies. I would point out Motif Investing had their service operation located in Rancho Cordova. They were acquired by Schwab. I think they've still got a presence there. Company called Folio Dynamics had their outsourced portfolios operation here in Sacramento. That company's been acquired by one of the 800-pound gorillas of wealth tech, Envestnet, $4 or $5 billion company. That's publicly traded. Redtail, it does CRM optimized for financial advisors and financial advisory practices, and started from scratch here and now has a pretty decent number, I think 100 plus employees and a headquarters in Gold River. And then, my company Risk Allies was founded here in the Sacramento region, and today has about 125 employees here in the region, and it's been a great place to grow. There's a lot of interplay between those categories as well. For example, shout out to Brian Barton with American River Gold, who I know is on this call. He has harangued Riskalyze for years to cover cryptocurrency. And now we analyze risk in Bitcoin beyond just the traditional stocks, ETFs, mutual funds, and about 250,000 other securities that financial advisors typically have in investment portfolios. Of course, now he wants Ethereum, but hey, one step at a time, you know? So, yeah, we've grown to about 125 employees here in the region. And when I think about the greatest benefits of building a business here, it's really about quality of life. You know, we attract people from other regions who love the climate, the access to recreation, the proximity to, you know, SMF and SFO airports, depending on their travel needs. You know, for any region to continue building advantages, I do think we're going to have to move past our current, I would argue, temporary state and kind of figure out what our new normal is going to be when it comes to collaboration in office. You know, there's kind of this temporary artificial state where geography doesn't matter, but I'm a little bit of a contrarian. I think that we're clearly going to have more remote work in the future. But I think that has a shelf life, and many people in our workforce want and need better collaboration with their teams. And so, you know, I think that, frankly, as we kind of, you know, start to exit this pandemic, and it's so exciting to see, you know, the announcements around vaccinations being widely available to every adult American. And we start thinking, you know, seeing the light at the end of this tunnel and thinking about exiting the pandemic phase of this. You know, I think that the COVID inflection point will really continue to benefit the region as, frankly, more Bay Area folks move up the hill for our quality of life. They get more bang for the buck on housing. They're still close to San Francisco if needed. And then at some point, it becomes attractive for them to actually join a local company and get to work in a collaborative environment. I can't tell you, you know, we actually hired one of our marketing leaders, for example, who had relocated to the area, you know, for spouse work-related reasons, but was working remotely for their team in another city. And they just wanted that in-person collaboration. Of course, they joined right before the pandemic started, so they didn't get as much of that in-person collaboration as they were hoping for. But I think that that's a trend with some legs. So, you know, at the end of the day, I'm just very long on the Sacramento region. The advantages are clear. The trends are headed in the right direction. And, you know, with GSEC helping to put the focus on our region as a fintech hub, I just think it's really exciting to think about the companies that will be, you know, big and strong companies 3, 5, 10 years from now, and the companies that that will be started 3 and 5 and 10 years from now. So super excited to be a part of this, thrilled to be a part of the FinTech Consortium. And thanks again for having me. I'm going to hand things over to Mike McCarthy to kick off our panel discussion around cryptocurrency.
Thank you, Aaron, and thank you to all of you for joining us today for the panel discussion on blockchain and cryptocurrency. I'm Mike McCarthy, CIO at Safe Credit Union and a GSEC FinTech Consortium member. So before we get started with the panel, I want to remind everyone we'll have a Q&A portion following the panel questions. So if you have any questions for our panelists, please use the Q&A chat box. To open things up, we're going to go around and have each panelist do a brief introduction, and we'll start with Ali Medina with Blockchain Advocacy Coalition.
Thanks for having me. Yeah, I'm the director of the Blockchain Advocacy Coalition. I am also a council member for the city of Emeryville and served as an advisory member to the state blockchain working group.
Thank you, Ali. And next we'll go to Joe Ciccolo with BitAML.
Yeah, thanks, Mike. Hi, everybody. My name is Joe Ciccolo. I'm the founder of BitAML. We are a regulatory compliance advisory service, and over the past 6 years have helped various different cryptocurrency compliance needs within the industry, working with Bitcoin ATM operators, online exchanges, trading platforms, and other innovative companies to help them understand and realize their compliance obligations and responsibilities.
Great, thank you, Joe. And last but certainly not least, we'll pass over to Chris Schultz with the California Department of Financial Protection and Innovation.
Good morning, I'm Chris Schultz. I'm the Chief Deputy Commissioner at the Department of Financial Protection and Innovation, formerly known as the Department of Business Oversight. We changed our name effective January 1st, and we also have some new responsibilities. We're formerly the state's banking and financial regulator, but effective January 1st, we have a new mandate to help bring in innovative services and products to market and diving into financial technology and innovation.
Great, thank you, Chris. So let's get into our first question here. So what are some of the broader use cases for blockchain? What are some of the wider implications and benefits of this for the greater Sacramento region and beyond? Ali, let's start with you on this one.
Sure. I probably have far too many use cases, but I'll give out a few that I think would be interesting for this group. Cryptocurrency is obviously the first thing you think of when you think of blockchain, mainly Bitcoin, but there's a lot of uses to the technology beyond that. It's the first thing people figured out to do with it. Like email was the first big thing for the internet. Right now in the crypto space, there's been a lot of talk about Bitcoin and DeFi, decentralized finance, but there's so many interesting use cases around stablecoins, which are a kind of cryptocurrency pegged to an underlying asset. So central banks are looking at digital currencies, including the United States announced this August, I believe, it's partnering with MIT to study that. China is currently piloting this technology. So I think we're going to see governments looking into stablecoin adoption. The city of Berkeley is doing a pilot program for microbonds issued on blockchain so that people within the community can participate and purchase assets issued by the city. The first pilot is going to be to buy a fire truck with a microbond that's issued in the city of Berkeley. So I'm really excited about that. There's also a lot of great supply chain use cases for blockchain. Maersk, the world's largest shipping company, is using blockchain. The Port of Rotterdam uses blockchain to track incoming ships and reduce the carbon footprint by reducing the number of idling ships in its port. So those are just a few that I think are really interesting. I think the implications for the region are, this is a growing industry. I think we've seen a lot of excitement and investment in blockchain. Those that I expect to be more commonly used will be the applications where you don't know that you're interacting with blockchain. There's verifiable credentials being used for medical health records. Lumedic is a company doing that. They've been acquired by Providence St. John. So there's large hospitals that are using blockchain on the back end where you're not noticing. I do think that regions with clear regulatory frameworks are seeing immense economic growth from this sector. Hong Kong in particular saw 4 times the job postings for blockchain after doing a large investment in this space and creating a regulatory framework. So I believe that California has, absolutely got the ability to retake the position as a global leader in this space, and Sacramento can be the hub for that.
Thank you, Ali. Joe, Chris, anything to add to that? All right.
I would echo the sentiments of Ali. I think that's spot on. We could go in any number of directions with blockchain applications. I think digital identity holds a strong promise, and part of that, as Ali mentioned, with medical records and those vital pieces of information, and then perhaps that may be cascading into government with property records and deeds. I know when I lived in Illinois before moving out here to the greater Sacramento region, the Cook County Recorder of Deeds piloted a project. Karen Yarborough's office and John Merkovic was a catalyst for that project and wanting to put deeds on the blockchain. And this was several years ago, so a little early on in the curve, but those ideas potentially getting into government, and as Ali mentioned, a project in Berkeley sounding promising as well. So hopefully we'll see that. And as we've come to find out with the new rebranding of what was then previously the DBO, perhaps we'll see a lot more of these types of pilot projects with the innovation they're focused on within that agency.
Good timing on that. Senator Hertzberg reintroduced his vital records bill this year, SB 689, that would allow FS recorders to issue birth and death certificates on blockchain. And this was in response to the fact that we no longer have a manufacturer of the paper that you get those records on in the US, and there have been shortages in Stanislaus County. So by being able to create an immutable record of how the individual got these, blockchain is a great way of kind of circumventing the whole paper manufacturing and shortage problem. So yeah, the state government is actively looking at it.
All right, great. Thank you for the discussion on that. We'll move into question 2. From a regulatory standpoint, what are some of the changes that have already recently occurred or are in the process of occurring related to crypto and blockchain? Chris, why don't you take this one first?
Yeah, thanks so much, Mike. And from a regulatory standpoint, there is still a lot of uncertainty. A lot of that has to do with the changeover in federal administration and the different postures that the Biden administration may be taking that the Trump administration wouldn't have taken. So I think it's going to take some time for this to settle out on a federal basis. Here in California, the DFPI does regulate some aspects of crypto activities when it comes to our current regulatory formats, such as a bank that wants to engage in crypto activities. For example, we engaged pretty significantly with one of our bank licensees, Silvergate, on a bunch of cryptocurrency issues. We ultimately allowed Silvergate to offer cryptocurrency custodial services under their bank charter, and later to issue a proprietary stablecoin, a 1-to-1 ratio with the dollar. So we're seeing, as a regulator, cryptocurrency issues coming up with our existing licensees. We haven't established a BIT license, such as New York has done here in California. Our historical authority was whether your thing fit in a box or not. And if it didn't fit, if it fit in one of our boxes, we regulated. If it didn't fit in a box, it was basically unregulated. Under the new law effective January 1st, we'll have express authority over all consumer financial products and services in California. So if it doesn't fit in the box, it still may be subject to our oversight. It's a more dynamic consumer protection model. We do have complaints about crypto from consumers. We have 31 complaints, and most of those in the last couple of months. In light of these growing number of complaints and the new authority, we're really looking at how to address this. It's definitely not going to be a one-size-fits-all approach. One thing I did want to highlight for the folks in the fintech sector here is the new law did create an Office of Financial Technology and Innovation within our office. So we're hiring up right now, and we're going to be interacting very directly with founders, venture capitalists, innovators to figure out what's going on so we can be ahead of this. So we're not a regulator who's trailing, but we're a regulator who's moving as the industry is moving, and we're right there in step with you.
Great, thank you, Chris. Ali, Joe, anything to add to what Chris has shared?
Yeah, sure. I guess from the regulatory compliance perspective, so it's historically California has, and you know, I don't like to use the term no action or no opinion, but has taken a little bit of a hands-off approach and allowed the crypto industry to flourish here in California, which I think has been fantastic. And it was mentioned the BIT license. New York passed the BIT license, which was this comprehensive one-size-fits-all sort of licensing. Basically, if you're doing any exchanging of crypto, so if you decide you wanted to trade some crypto on a peer-to-peer network on the weekends and maybe make a little extra money, you'd have to go through this laborious process and apply with the NYDFS and pay hundreds of thousands of dollars to lawyers and others to get started. And it did not ring true for inclusivity and allow for companies to get going from the ground up and build with their garage and their laptop the next financial institution. So I'm thankful for that approach in California. We've seen states like Illinois and Texas that have come up with favorable guidance that have said, look, we're not opening the door to all activity and saying you don't need a license, but we understand for retail direct, and I'm generalizing here, direct wallet to wallet, you know, type of transactions or individuals trading peer to peer, that we may not necessarily see that as money transmission, that we may, as a state, decide that we don't necessarily want to license you, but rather we'll certainly keep an eye on you and you certainly come within our purview. And I think Chris mentioned the dynamic nature of their office having that capability potentially down the line as they decide and suss out how they're going to regulate different business models, rather than I think we can all agree a one size fits all does not work, and it certainly does not safeguard consumers, and it doesn't ring true to inclusivity and openness to the marketplace.
All right, great. Thank you, Joe and Chris. I guess we'll move into our last question here for today. What should banks and financial institutions be aware of regarding exposure to cryptocurrency as it becomes more mainstream? Joe, why don't we start with you?
Sure, this is an interesting one. So what we found is that banks have grossly underestimated their exposure to crypto. In fact, CipherTrace, which is a blockchain analytics company that got started in part by generous donation from the, or I should say grant, from the Department of Homeland Security that helped get this blockchain analytics and intelligence tool off the ground that allowed for financial institutions, law enforcement, and regulators to see the activity on the blockchain. And what CipherTrace found is that banks were underestimating their exposure to crypto by a factor of 10x. So if, for example, your institution thought within a set period of time you had $10 million of crypto exposure. It was probably closer to and maybe even over $100 million within that period of time. So that said to us that maybe the banks aren't understanding where the crypto activity is occurring, or perhaps they're not as knowledgeable about crypto. And as we've come to find out and talk to these institutions, generally their crypto policy is that they don't bank crypto. It's sort of this 1 or 2 line affirmative statement, as if that will get the job done. That's sort of the first line of defense. Second line of defense is, well, we have these rules-based alerts that look for keywords like bit and coin. And of course, the cryptocurrency companies are smarter than that. They know to maybe use a plain vanilla or benign name for their company in the hopes that maybe they won't get caught up in some sort of screening process like that. So what the banks can do, in my opinion, is to really reach out to the crypto industry and start a dialogue. The crypto culture is not a monolithic culture. There are a lot of different players, a lot of different business models, and a lot of areas that crypto companies and banks can meet and see eye to eye on. It was mentioned a few times already that banks are now starting to custody digital assets. You know, these are great opportunities for banks to break into the crypto industry, if you will, or even just to provide banking services to tertiary companies in the crypto space, such as ours, which is a consulting firm, or perhaps a company that's selling mining equipment, or things that aren't necessarily as regulated or as intense, but it's an opportunity for the banks to have a dialogue, talk to these different folks in the crypto industry. And if you've ever talked to someone that's involved in crypto, they will talk for a long time, present company included, about how much they like the space and will share as much information as they can. And I think that in some ways, there's been a little bit of a missed opportunity for banks and financial institutions, but I'm excited to hear more and more banks getting involved in crypto. And I think that education barrier is going to close in the relatively near future.
Great, thanks, Joe. Ali, Chris, anything to add on that one?
I agree with Joe completely. I think there is a big opportunity for banks to engage with these companies. It's a really serious problem that smaller crypto startups don't have banking access. That means they're having more exposure and more risk by holding their funds in other spaces. And I heard the founder of FTX, a multi-billion-dollar company, talking about how he offered his bank $50,000 a month to just keep their bank accounts open. And he's like, I offered them way too much. It freaks him out. I should have said 5. Because he had so much trouble having a bank account just in the early days of his business. So I believe that there is a great opportunity to capture this industry's need for banking and to come up with innovative solutions here.
Totally agree, Ali. Thanks for sharing that. And we're going to move into our Q&A, but since we have a related question, Brian Barton asked if, to me actually, but to the group, I'll open it up to the panelists as well, if Safe Credit Union would be open to opening a crypto wallet or exchange account, for that type of member. We certainly aren't set up for it today or have considered all the ins and outs that Joe and Ali just talked about, but I do agree with Ali and Joe around the opportunities that are there. And so no, you would not be laughed out of the building. We'd be open to discussing and trying to innovate on that. So totally a great topic, great opportunity, like pointed out by the panelists. All right, so we have some time here to get into some other Q&A. So we'll go to David Rankin asked, will banks be developing their own back-end and custodial solutions for cryptocurrency or utilizing decentralized finance in some manner? So who wants to take a first attempt at answering that?
I'll take a stab at that one and say I think we're seeing a little bit of both actually. So I think banks are looking at both paths in my experience.
All right. All right. Well, we'll move on to another question also from David Rankin. Will banks become more friendly to crypto companies and those moving in and out of crypto? How are banks handling AML and FinCEN concerns?
Sure, I can maybe start with that one. Yeah, so we are seeing more banks getting involved in the crypto space and wanting to offer banking services. I think maybe in the early days, there was a lot of baggage that the crypto industry was suffering from with things like Silk Road and the Mt. Gox hack. And in the crypto space, to us, they're in the very far rear view mirror, but to banking and the risk that they undertake in banking these particular companies. it's of grave concern. So I think as time has gone on and there's been more education and outreach, banks have slowly started to open a dialogue with the crypto space and are not necessarily understanding exactly how they want to fit in with crypto, but are willing to have that conversation. And as was alluded to by Mike, these things take time. Banks don't go out tomorrow and say, I want to bank crypto. It's usually a long, in some ways, choreographed process. And we've been through that with some of our bank clients where they'll start off at their quarterly regulatory roundtable and they'll start to drop hints that they're exploring crypto. They've sent some people to some different events and they've started to accumulate some information. They've interviewed some executives in the crypto space, and then take them down that path of exploration, put together a team and task force internally. We've reached out to different AML professionals. We've created questionnaires. So this is a kind of a long process. So if a bank wanted to start today to bank crypto, they're looking at a timeline that's measured in months and possibly even a year to do it the right way, to do it professionally, to sit down, to talk to regulators like Chris and his team, to talk to their federal regulator, and to really come up with a cohesive strategy. And those things take time, they take vision, and they take an appreciation for what crypto can be in the future. And I think that many of us didn't necessarily have that view of crypto early on, and that was perfectly understandable. But I think fast forward to today, there's an amazing opportunity. And again, we're seeing more and more banks step up to the plate and open that dialogue and start those conversations. It's just unfortunate that these things take time. And sometimes in the crypto space, we are really excited about speed and excited about the future. And sometimes we have to realize that it takes time for everybody to catch up and be on board.
Totally agree, Joe. It takes some time. There's a lot of regulations to get through, but it's something that for a long time, I would say we've ignored it, but we've just become complacent and waited for crypto and blockchain to really become more popular and all those other things. And so for financial institutions to catch up, I think that's where we are now. We have to sort of catch up with how prevalent and how powerful this technology is and be ready and willing to make those changes. So appreciate that response. Next, we'll move to a question from Aiden Finn. Is there a requirement on the hospitals mentioned using blockchain earlier for patient medical records to prove compliance with CCPA and the right to have personal information deleted? If so, how will this be dealt with?
That's a fantastic question and a great flag. So the technology I was talking about was verifiable credentials, which is an application of blockchain technology. But instead of putting medical records on blockchain, where they could be on a public or private ledger, they'd be immutable. Verifiable credentials put the attestation that a verified issuer has put that record on the chain, and that's what the only thing that's visible. So the patient record is not on blockchain. It's a real privacy preserving way of using decentralized ledger technology. Not all verifiable credentials are technically a blockchain, but they do tend to use DLTs. So there's a lot of overlap. And Canada has invested extensively in creating the Pan-Canadian Trust Framework to create interoperable digital identity, business license records, framework across those using verifiable credentials technology.
All right, thank you, Ali. We'll move to our next question. Another question from David Rankin. Anyone looking to join Kraken and Avanti and becoming a custodian in crypto soon? Any of the panelists?
Is that a question about? Yeah, is that a question about what specific institutions? So I don't know any off the top of my head. I'm just making sure I understand the question correctly.
Yeah, thank you, Joe. We'll take that one offline and we'll answer outside the webinar. We'll move to the next question then from Lawrence P. Do you feel that banks understand DeFi and do you see any opportunities or just risks with that? So decentralized financing of crypto. Do we think banks see opportunities or just risk with doing that?
From our perspective, I'll take a stab at that. From our perspective, I think it's super early with DeFi in a sense. While it's in the crypto space, it's almost starting the clock over in terms of the time horizon that crypto had before it became closer to the mainstream. There are a lot of inherent risks tied to the things that we don't know, more so in many cases what we do know about DeFi. So I think that that's maybe something that's not going to be more immediate. There needs to be more time and more of a study on that. I know that the feds have put in a lot of effort and a lot of extra resources to study DeFi and have made that abundantly clear in congressional hearings and other interactions that regulators have had in the public setting and with consumers. So the best I can say is there's a long runway for that. And for banks, that maybe is even a longer runway as they begin to think about what the risk is there. And again, syncing up with folks like Chris and his team to realize what does that mean for their licensing and what are their obligations above and beyond what they already have to do in order to remain compliant with the state of California and the federal government.
Chris, any thoughts on what Joe just shared as far as how that would work with your department?
I think Joe is right on track. I did want to say, banking's complicated. There are California chartered banks and federally chartered banks, and then there are other federal regulators in this space. But we work very closely with our partners at the federal regulators to on these issues. And I think if folks are exploring any new territory, a lot of banks and credit unions are exploring banking cannabis related businesses as well. We're doors open. We're happy to talk and happy to help craft a path that is compliant and also works to serve some of our emerging.
Oh, great. Thanks, Chris. So we have one more question. I think we have time to get to it. It's from Aiden Finn as well. Is there an investor appetite among funds or investors in the area to engage in distributed ledger technology projects or application startup scale-ups? So distinctly and a distinct from fintechs.
Does this area include the Bay Area? Because then absolutely. Yes, there's over $3 billion of investment in the cryptocurrency blockchain space in California alone. So there's enormous appetite for investment. I don't know about Sacramento specific. I can check on Crunchbase and see what I can pull out there. But I believe that, yeah, there's only growing interest from institutional investors in this space.
Thanks, Ali. And I know that the GSEC would like to answer, add more color to that question offline. So we'll send that out to all of the attendees today. If you guys have any other questions that we didn't get to today, or you think of a question later on, please share it with us and we'll do our best to have the panelists or GSEC provide a response. So I just want to take this opportunity to thank our panelists for participating today in the conversation. And we'll go ahead and pass it off to Manvir Sandhu, CEO and co-founder of Zenify.
Hello, everybody. That was a great discussion. Thanks for the intro. For those who don't know me, I'm Manvir, the CEO of Zenify. We're local fintech here. We focus on digital transformation. So a lot of our clients are wealth advisory firms and banks and mortgage organizations. And we specialize in cloud technologies like Salesforce and nCino, just as an example. And we're headquartered here. We made the decision to headquarter here in Sacramento about 4 years ago. And really it's just the talent. There's a lot of great talent. As a lot of you guys are hiring great talent in the area. And there's a huge desire for people to want to get into fintech. So that just posts, oh, my video must not be on. Oh, is my video on? Is it okay?
Yes.
It is? Okay. Sorry, I got a note saying video was on. But yeah, so there's a lot of activity in the area. This consortium is awesome in that it's generating conversation and dialogue, like topics like today around blockchain and crypto, but also in previous discussions we've talked about raising capital for fintech startups. We've talked about jobs. How do we create more jobs in the area? How do we get access to talent? People that, for example, know and understand software and are interested in programming. And there's a lot of exciting things going on along those lines as well. So we needed a mechanism to go beyond just this consortium, which meets like quarterly. And we want ways to keep the conversation and dialogues going. There's so many interesting people that are doing amazing things as part of this forum. And so we looked at different options. We looked at LinkedIn and, Google and Microsoft and a lot of the different solutions. And we aligned on Slack. We felt like Slack was a great vehicle for us because of, just the real-time conversation component of it. And then there's a nice organization it has around focused topics, channels focused, for example, just on, cryptocurrency. There's channels focused just on, raising money. And, it's something that's free for everybody to join in and collaborate on. And So I encourage everyone that's interested to join the channel and to get involved. You know, it's all about engagement. So the more sort of interesting engagement topics that we have, like this,
I was starting to think that it was ...
the better it is. And we definitely don't want to utilize it as a channel to like drive sort of marketing and sales kind of thing. You know, everybody's very fatigued with all the email and LinkedIn solicitations we get. So we don't want to make it that as much as it's more about the content and the dialogue and the conversation and, you know, putting yourself out there and being comfortable putting yourself out there, because not all of us know each other necessarily, but it's a great way to start to get to know each other, but having a platform and, you know, specific content and topics that bring us together that we're all very passionate about. And so we definitely encourage that. And if people have ideas on, you know, topics or channels that you want to get going in the dialogue, we're totally game for that. We can easily set that up. And yeah, that's the plug, guys. I mean, this is the future. This is the way to keep the conversation going. Works very well on like your mobile phone, and you can set up alerts and all that stuff as you need. And it is very easy to interact with people one-on-one or in a group setting. So that's the plug for the Slack channel. Thank you.
All right, Barry is just hopping online. Barry, you with us? All right.
Yeah, I am.
All right, there he is.
Yeah, well, we must be on like Indy 500 time there. I was a click off. Well, let me start by thanking everybody that participated in this with us. You know, the data on California, I think economically is very strong. You know, we didn't have the mass exodus of talent and startups that people talked about. When people left the Bay Area, they predominantly came to the state capital region for the quality of life. And we are the Bay Area. You know, we're one common market between Greater Sacramento, the Bay Area Council, all the way through San Jose. We share the same labor. We share the same government, and now the capital markets and the talent are getting closely tied together. So our goal as an organization is to continue to support the economic growth of California, you know, get our job at the Greater Sacramento Economic Council to build our economy and carry our weight as part of the California success story. And then, you know, continue to connect new ideas to the marketplace. Really grateful to our banking leadership, our board of directors that led this conversation today. I'm very grateful to the Newsom administration for their continued support. I'm very excited about the future of California and the future of Sacramento. And we invite all of you to stay connected to us through our Slack channel. And if we can ever be helpful or supportive to you, please reach out to us. But we're very bullish on our economy. And I also want to give a shout out to Zenify and to the other individuals that hired our graduates of our inclusion program. We've had the Biden administration reach out to us. The CEO of Google mentioned it. We had a 93% graduation rate for members of our underserved community getting careers and professions in fintech and in banking and in other fields. So this is the new economy. We have our eye on inclusion. We need to bring everybody along. This is going to be great for consumers. It's going to be great for California. And we really and truly appreciate everyone for their support for our community and for this new exciting FinTech consortium. So with that, I will wish you a good day and thank you for your time.